It's no secret that having a good credit score is a key foundational piece that you'll need in order to achieve financial freedom. Having a good credit score helps you get approved for purchases like cars and homes, but also the higher the score, the lower the interest rates that those loans are, which in turn keeps more money in your pocket so that you can invest more in other things. So today, I'm going to give you my personal blueprint on how to achieve the perfect credit score and becoming a priority for the banks to give you money. So the first thing you need to understand is what exactly goes into your credit score and how is it calculated. Now, your credit score is broken down into 5 parts, with each one weighing differently on how they impact your overall score. The first section is your payment history. Now, this is 35% of your score, and it simply is tracking on whether or not you're paying your bills on time or if you're late. Now, if you have been late on a bill, this score is impacted by when did that late payment take place. If it's something more recent, it's going to have a greater effect than something old. Now, it's equally as important to understand when a payment is considered late. As an example, you may have a payment that's due on the 1st of every month. Right now, you may think that if you pay on the 2nd or after, it's automatically a late payment. Well, that's false. Your creditor may charge you a late fee or even tack on additional interest. However, it would not be reported on your credit report as a late payment unless you've gone 30 days or more and still haven't made a payment to that creditor. So if something popped up and for some reason you weren't able to make that payment on time, do not panic. Just make sure you make that payment within that 30-day period and your creditor will still report an on-time payment to your report. Now, one way to avoid all this is just go ahead and set up automatic payments. That way you don't have to worry about a payment being missed or being on time. Now, the second part of your report is going to account for 30% of your score, and that's the amount of debt you had, or more easily put as how much of your open lines of credit are you using. You may at some point have come across somebody in the banking industry while you're trying to apply for either a car or a home, telling you that you should keep your utilization at 30% or below. Well, this is the section that they're talking about, guys. So let me give you guys an example. Let's say you have a $10,000 credit card and that's the only card you have available to you. And then you go and charge $9,000 on that card. Well, now your utilization is at 90% because you've used 90% of your available credit line that card provided you. And remember, 30% of your overall credit score is your utilization. So now, because that's at 90%, your credit score is going to take a dump just because you're using way too much of the credit you have available to you. So people ask me all the time, well, Josh, how do I get my credit score up? What is the easiest way to do that? Well, the easiest way is to get more credit cards or ask your current cards for credit line increases. Because by getting additional credit cards or getting a credit line increase from your current bank automatically begins to shrink your utilization because the pool of credit line that you have available to you is now larger. So using my last example, let's say you were to get approved for an additional $20,000 in credit line. Now that puts your available credit at $30,000. So when you use the $9,000, your utilization shrinks to only 30% because you're using $9,000 out of an available $30,000 in credit line. Now you're in that sweet spot. And getting a credit line increase is simpler than you think, guys. Simply call your bank issuer and ask for one. And a lot of companies, guys, you can now just get on their website and ask for these credit line increases, just like this one here on Capital One. You also want to make sure that if you're asking your bank for a credit line increase, you're currently in good standing with them. You don't want to ask them for anything if you haven't been making your payments on time. Now, if you do speak to your bank over the phone to ask for that credit line increase, they are going to ask you what you need it for. And what I've done in the past is I've just let them know that I have a large purchase coming up and my credit line won't support that purchase. Or you could tell them you have a different card and that you're more likely to use the competitor's product versus theirs because the credit line just isn't big enough. And while you got them on the phone, ask them if they can lower your interest rate. I've had numerous cards on multiple occasions give me 0% for an additional year simply because I asked. Remember, closed mouths don't get fed. Now, you may have noticed 65% of your score is wrapped up in those first 2 sections, so that's where you're going to concentrate the majority of your time. Now, the third section of your credit report is the length of your credit history, which accounts for 15% of that score. Simply put, this is just an average age of all your accounts put together. Now, I know some of you may currently be in bad standing with your creditors. My advice is to contact them directly, see if they'll negotiate a lower payment than what you currently owe, but do not close the account if it can be avoided, because the age of that account is going to help strengthen your credit score. And since the idea is that we're going to be opening up new accounts, those new accounts will pull down the average length of your credit history. So you want to have those old accounts on your credit report. The fourth section of your credit score is the amount of new credit that you're opening up. Now, this only accounts for 10% of your score. However, keep in mind that as you're opening up those new lines of credit, it's not just affecting this section, it's also affecting the length of credit history section as well. But the primary goal of this section is to make sure you're not opening up too many accounts too fast, as you may be seen as a greater risk. Now, the formula that I personally used when I was repairing my own credit, I would apply for 2 new credit cards every 6 months to a year. On a side note, when you do go apply for new credit cards, if it's possible, pay down your old accounts as much as possible. That way it raises your credit score to its optimal number, which would improve your chances of being approved. Now, the last section of your credit score is your credit mix. This accounts for 10% of the score. This is just basically the different types of loans you have on your credit report, whether it's a car loan, mortgage, student loans, or credit cards. The better the mix, the higher this score will be. So now I'm going to give you my personal blueprint on what I did and what I teach others on how to achieve a perfect credit score. First, I went to creditkarma.com and signed up for a free account. Next, I went to Experian.com and signed up for a paid account, which cost me $27 a month, but it gives me access to my Experian score at all times. And every 30 days, I'm able to see all 3 real-time credit scores from both Experian, Equifax, and TransUnion. Now, the reason I pay Experian for the subscription service is no matter what they advertise, the free websites don't always give you the most accurate number for your credit score. And I want to be able to see what the banks see. The second reason is when the banks pull your credit report, 90% of the time, they're pulling that Experian score versus the other 2 credit bureaus. Now, once I had those 2 accounts set up, every 30 days, I would dispute all the negative items that were showing on my report. And even if the negative items didn't fall off immediately, I kept with that process repeatedly over and over and over again until I got the results that I wanted. And filing a dispute is pretty easy, guys. Right now, I'm logged into my Experian account. You would just click on the account that you're looking to dispute. You could scroll all the way down to the bottom and then just click this dispute button and walk through the steps. Now, you can file a dispute either online or by mail. I personally did all my disputes online because it was just so easy. Now, when you submit the dispute through Experian, it only goes to that credit bureau, and you want to make sure all 3 credit bureaus get that dispute. So with Credit Karma, if you do the disputes through their website, they'll report that directly to TransUnion. And for Equifax, you just get on their website. You don't need to sign up for any account. They'll just confirm that it's you, and then you can dispute those items directly through their website. Next, I would apply for those 2 new credit cards every 6 months to a year, as I stated earlier. I'd also go back to my old creditors and ask them for credit line increases. I'd use all the cards as much as possible and then make sure everybody was paid off every 30 days. So that's the blueprint. You wash, rinse, and repeat those steps consistently, and I promise you, you'll see exponential growth in your credit score in as little as a few months. If you haven't already done so yet, please hit that like and subscribe button and share this page with all your friends. If you have any questions or comments, feel free to leave those down below and I'll be sure to respond. That's all I got for you guys today. See you guys next time.